We're speaking today with Wharton Management Professor Mauro Guillen and Adrian Tschoegl, a Wharton lecturer, about Banco Santander, which has put out an offer for 25% of the stock of its Mexican subsidiary, a deal that's valued at about $4.3 billion. The professors are authors of a book called Building a Global Bank, The Transformation of Banco Santander, so they're in a good position to talk about this bank. This is the largest stock offering ever in Mexico. Would you comment on just how significant this is for Banco Santander and also for Mexico itself? Mauro, maybe we'll start with you.
Well, this is one additional step in terms of fully utilizing their capital base. So they have either plans or they have already floated part of their equity in their Brazilian subsidiary in the UK. And now in Mexico, those are the three most important markets right now in which they have a presence outside of the home country of Spain. So this is essentially part of a long-standing policy to try to fully utilize their capital base. And I mean, let's remember that there's other banks that have done this, and there's a lot of companies, especially for emerging markets, that have essentially used partners in local markets and floated part of the stock as a way to leverage their resources more broadly and be able to accomplish more in a shorter period of time. So this is it's a smart move, but it is a part of a long-standing strategy on the part of the bank.
Does it say more for Mexico, perhaps, than it does for Banco Santander at this moment?
Well, keep in mind, if they were going to float anything, Mexico is the one to float because of the major markets they're in, it's the Mexican operations doing best. Last year, it accounted for about 10% of Santander's global profits, which is just a little bit under Spain. But it's the one where the profits are growing versus Brazil's a little off, Spain is a little off. So in terms of what's easiest to sell, it's going to be the Mexican operation. Now keep in mind, this 24.9%, they actually sold that amount back around 2006 to Bank of America. Then about 2 years ago, Bank of America sold it back to them. So in effect, all they're really doing is putting the same 24.9% back into play in a way. As Mauro said, it's part of a long-standing plan. It's right now, part of the motivation is, A, they just made the 9% capital base that the European Banking Authority wanted. They want to get to 10%. So this they'll use the proceeds to up their capital base. Second, at a time when Spain is, let's say, a little bit in the doghouse globally, there's a problem of valuing Santander. If they can get market valuations for the main components, that puts a floor under the valuation of the whole corporation. So, in other words, if you sort of add up Brazil and Mexico and the UK and some other bits and pieces, then the total thing has to be worth at least that, plus at least a little bit for Spain.
That's interesting. It sort of plays into another question I was thinking about, which is that here you are in Europe, all the banks are having trouble raising money. All the banks are being asked to raise money under Basel III and other new regulations that they've got to beef up the reserves. So they're kind of caught between a rock and a hard place, and of course the economies are tanking. But here's Santander, at least outside of Europe, able to raise money. But also they had a successful bond offering I think it was a month ago, of about 2 billion euros, which did pretty well, especially considering what some of the sovereign bonds, how they were tanking at the time. So that's another sign that the market's viewing Banco Santander differently than some other banks in Europe, is it? Would you say?
It is a very unique bank. I mean, there's very few banks in the world that have a franchise, that have operations in the retail market in so many different countries. HSBC perhaps is the everybody's favorite example when it comes to global retail banks. But after HSBC, maybe there's a couple more, and Santander is up there among the top 5 banks in terms of having operations in multiple markets. And of course, the European crisis, and in particular the problems in Spain, have resulted in a situation in which the stock of Spanish banks is, or some Spanish banks at least, is undervalued, right? Because again, that stock is being heavily penalized by the fact that
It's in Spain.
they are associated with a market that is now in trouble. But Santander generates more than half of its profits and has more than half of its assets outside of the home country, right? Way more than half of their profits.
Yeah.
And so the markets are not seen through that. So this kind of a flotation in Mexico helps clarify, as Adrian was mentioning, that there's a minimum that this bank is worth, and no matter how skittish investors are about Spain or about the eurozone, this is a bank that has major operations outside of the eurozone, so they shouldn't be penalizing the stock as much.
So the benefit to the brand in the market is maybe even greater than the proceeds from the stock.
If it draws attention to the fact that in Santander is about 50-50 mature markets, emerging markets. Within the mature markets, look, in total I'd say Spain is probably last year's profits under 30%. So if it draws attention to the fact that Santander is really a world play, not a Spain play, that can only help in terms of perception of the bank. Now, if additionally they use these funds, and they're gathering some other funds, you mentioned the bond offering, they've just decided to sell, they've just sold their Colombian operation. They decided it wasn't growing to where they wanted it to be, a 10% market share or better. So they sold that, that's going into capital. If they now have a better capital ratio than is mandated, one of the best capital ratios in Europe, that too pulls them out of the league of troubled entities.
In general, how has the European financial crisis affected Santander? We've talked about it a little bit, but maybe we could elaborate. And how will it affect it in the future? It's affecting its strategies, as we just heard. But
well, certainly. I mean, for starters, the price of the stock is at historical lows. Obviously, it has hit earnings, right? Because even though Spain is far less than half, it still is an important market for them. And other than that, in the eurozone itself, they have consumer finance operations throughout Europe, Western and Northern Europe, and a little bit in Eastern Europe. These operations, of course, have suffered because, of course, consumption and consumer credit has decreased as a result of the recession and the crisis. So they are being hit both as a bank and as a market player, in the sense that whatever happens with aggregate demand also affects them, right, if the economy doesn't go well. But other than that, as Adrian was mentioning, then they have a presence, very strong presence, in other developed or mature markets that are not eurozone. So that's the UK and the US primarily, right?
Well, and Brazil.
And then they have emerging markets, right? They have emerging markets such as Mexico or Brazil and a couple of others of importance in Latin America. So they are well positioned, in terms of the portfolio of businesses in different currency areas and different types of markets to weather a storm such as this, as long as, of course, not all economies go south at the same time.
Well, I was going to ask about that. You mentioned Brazil, and of course Brazil's economy has been contracting of late. They've got a lot of loans out there. There's been talk about possibility of some, bad loans coming out of the woodwork there. Any possibility that those bad loans could be large enough to, give them a big dent, or is this something that would be considered manageable?
Probable. Yeah. I mean, look, you can always be surprised. UBS is currently, the trader who cost UBS $2.5 billion in bad trading just went on trial today, I think, in London. You can always be surprised. But in Brazil, Santander had a okay-ish bank, and then when they took part in the breakup of ABN AMRO, they got one of the crown jewels, which was the Brazilian operation, which was very well run. And the president of the Brazilian, or the CEO of the Brazilian operation, is very highly respected. He ran a good bank, it was ABN AMRO Real. He's now in charge of the total thing and still trying to put the various pieces together. But you have essentially a good and a very good operation being put together. So it's not likely that you're going to have some major surprise there. And even in Spain, thinking about it, they're pretty good on risk control. They're a bit below average for their market share in their exposure to the real estate sector, in particular to residential mortgages. So they've been cautious there too. So I'm not, again, always be surprised, but I wouldn't expect anything there.
Does the Mexican issue, because it's the largest in Mexican history and so forth, does it, I mean, it's part of a pattern where there's more and more successful IPOs. I realize this isn't an IPO, but it has some parallels to an IPO. But more and more IPOs and big IPOs coming out of emerging markets. We've seen it in Malaysia now, and even Indonesia.
I think one needs to put in perspective the fact, which is of course a fact, that this is the largest IPO in Mexican history for two reasons. The first reason is that Mexico stands out as a market in which there's been very few privatizations, right? So we've only really had one big privatization, which was the telephone company, and that's now controlled by Carlos Slim, right? I mean, the company that came out of that. That was many years ago, right? But Mexico hasn't really privatized anything else. You see, when you go to a lot of countries in Latin America, or you go to even countries in continental Europe like France or Spain, the biggest IPOs have always been state-owned companies that went public, right? But Mexico, you know, because of limitations in terms of how much the state can privatize, written into the constitution, you know, they haven't privatized the oil company, for instance, right? So has had very small IPOs. That's the first reason. The second reason is that in Mexico there are large firms, but most of them are controlled by families, and not all of them are listed. And if they're listing very small percentages, right? So here I'm talking about Cemex, I'm talking about Bimbo, I'm talking about Vitro, I'm talking about Modelo, all of these large Mexican firms, most of them with a global presence, right? In cement, in beer, in bread, baking, and so on and so forth. It looks big in Mexico, but it is in part because it is a big flotation. But even more importantly, it looks big because up until now, not that much has been going on in Mexico, right? Because of these two reasons, limited privatizations and very strong presence of family ownership in the largest firms.
So a bit of a special case there.
Mexico is a special case in many respects. In many respects. The other reason, of course, is that it's so close to the United States.
And in general, would you, after having literally written the book on Santander, would you comment on how their global strategy is going? You talk about it in your book. You made some predictions there, some of which turned out quite nicely.
Well, the big one is still open.
Let's talk about that.
And the big one is the succession, when Wharton steps down. And I'd say that's still, clouded and shadowed in mystery, because the obvious heir apparent is his daughter, Ana Patricia. But that's not, I wouldn't say it's not a foregone conclusion at all. So he's been at the helm since 86, 87, and the bank has done well. He took a number 6 or number 7 Spanish bank and made it one of the largest bank in the eurozone. And so there's an issue. When will he step down? Who will be a successor, and what effect will that have on the bank? And that's just open. That's an open question.
But in terms of global strategy, you mentioned,
I think they've been following essentially the template. I mean, their template has been, since they started to internationalize in earnest in the 1980s, it has been to grow by entering new markets. For the most part, to continue focusing themselves on retail banking, commercial banking, and not branching out into other things. And they've been entering a number of markets, more than 25, exiting some of those markets, Bolivia, more recently Colombia, just responding to circumstances. So they've been very, I think, pragmatic about market entry and market exit. They've also tried to diversify by, as I mentioned earlier, by monetary area and in terms of the characteristics of the economy, mature markets, emerging markets, and so on and so forth. So I think pretty much, in my view, the decisions that they're making, that they've been making over the last, 2 years, let's say, expanding the UK, consolidate Brazil, expanding to Poland, expanding to Turkey, and so on and so forth. All of those decisions are really consistent with the last 20 years, right? So they are not shy about entering new markets, even when other banks were retrenching in the midst of the financial crisis. And they're not shy about exiting markets if they think that they shouldn't be there, right? So they are, I think, continuing to, implement the principles that they established a couple of decades ago as to how they should go about growing internationally.
Yeah, they don't get locked into a market in the sense that developing a sentimental attachment. Try it out. If it works, if they can get the market share, and they do work mostly by acquisition. If they can build up a good position, fine. If it's a dead end, they leave. Colombia being the most recent example of that. And then they've got sort of 10 priority markets. That hasn't changed, and a lot of small ones, and they'll see how those go. But it's the same. It's a continuation of the same overall strategy of the last 20 plus years.
It's sort of interesting because it sounds like they have a certain nimbleness that a lot of bank analysts say banks need, but banks typically lack, so that might set them apart a little bit. What about Asia, which everyone talks about as being, for many, the future of banking, since it's seen to be the strong growth area? How are they set up for that?
They were in the Philippines. They did buy some stuff, and then they exited because they couldn't figure out how to make that work. They clearly have an interest in China, but they can't figure out a way to do that. In particular, they can't find people that can bridge between China and Spain, where top management has confidence in them. They do not. I could be dead wrong on this, but I don't believe they've taken minority positions in any major Chinese financial institutions.
Or Asian market, for that matter.
Yeah.
I mean, the thing is that there's really only 2 or 3 banks that have historically had a strong presence in maybe 1 or 2 at most 3 markets in Asia. I mean, these markets, let's say, India, Thailand, Indonesia, the Philippines, South Korea, Japan, China, they're all very different. I mean, they happen to be in Asia, but, they couldn't be more different from one another. They differ in terms of the structure of competition, the regulations, whether there are strong local players or not, and so on and so forth. So, it is certainly something that they're watching. I think every European bank wants to keep on watching, what's going on over there. But you see, we're talking here about a bank that wants to play in retail banking, opening branches and running, taking deposits, extending loans. Maybe that's not a part of the world where, they should be. They're exploring, they're trying to see if it makes sense or not. But, they have a lot of, room to grow in Latin America, in Europe, and also here in the United States. We haven't even talked about the United States. In the United States, they have a major presence in one small part of the country, right, the Northeastern Corridor. But that's about it. And this is a big market that is ripe for consolidation, right, because there's a lot of small banks.
Pieces, yeah.
And so they don't need to grow in China in order to keep on growing. And China perhaps is a difficult market. And, it seems as if China is following Brazil right now in terms of a deterioration of macroeconomic indicators, especially growth. So it's not clear to me that China would be. And of course, India is very difficult. You have very sophisticated, entrenched local banks.
I'd argue sophisticated, but very entrenched local banks.
Entrenched. And it's not clear why they would want, at least, let's say, in the next 5 or 10 years, to allocate resources to that part of the world when they have growth opportunities in Europe, in Latin America, and in North America.
One last question. You talked about growth opportunities in Europe. A lot of bank analysts say Europe has too many banks. There's going to be a consolidation, maybe a major consolidation. Where does Banco Santander fit into that should that occur, as many see as likely?
They've been sidestepping it a little by focusing on consumer credit rather than banks. And so if you look at the Scandies or Germany or so forth, they haven't really built up a banking presence. There's a bit of they've got a bit of a banking presence in Germany and so on, but it's been more of a consumer credit presence. They made one, for many years they targeted Italy. They were interested in Italy. They finally got an Italian operation, again in the breakup of ABN AMRO, and within a month they sold it to Monte dei Paschi di Siena. Mostly, again, this is the no psychological attachment. Even though they'd been trying to get into Italy for a long time, Monte dei Paschi came up with an offer that was ridiculously high, so within a month they got rid of it. I think one problem with Europe is it's still a continent of nations, and it's very hard for a foreign bank to make a major acquisition without there being a certain amount of concern. If you think about ABN AMRO, when that finally fell apart, the Dutch nationalized the Dutch bit, the Belgians took over the Belgian bit, and only Banco Santander came out because they had none of those pieces.
Yeah, I mean, Europe is complex, continental Europe. And will there be consolidation? Well, I guess first we need to know what happens to the euro.
Right.
And then next we need to know whether in the wake of a potential reorganization of Europe's treasuries, right, or maybe in the form of some fiscal union, whether then as a result of that governments become less concerned about foreign takeovers of local banks. It is inconceivable, of course, that in the context of a currency union, that you still have, in each of these markets, the first, the second, and the third largest banks is a local bank, right? Yeah. So there's been no, incursions, no invasions, right, of one bank onto another one's turf, right? After 13 years of a monetary union, right? This is really, really strange. So I think it depends on what happens to the euro. It depends on the kind of fiscal union. If the euro survives, it's obviously going to be with some kind of a fiscal union. Yeah. So what shape is that going to take? Are governments then going to, essentially, be more open to takeovers in the financial sector? It is a politically sensitive sector. It is a strategic sector. It is, a peculiar sector. That's why we love talking about banks, right? And in Europe, of course, many of these institutions are 100 years old, and it's very difficult to move away from that, right? But even here in the United States, I mean, it's sometimes hard to to see how there could be further consolidation when we all know that perhaps there should be more consolidation, right? So the problems are pretty much in this sector present around the world. But Europe is, I think, a very clear case, right, of compartmentalization or fragmentation, right, in the face of a monetary union, which is kind of weird.